of the, yeah. And then you should be able to allow, if he can join in the call, via your link, then you can share the screen through your laptop. If you want to do it that way.
We can, maybe you can show me what you're, because it's right now it's showing.
So if you could just connect to the Zoom call, so just go to your email. I said, oh, you're in? Okay, perfect.
Oh, is that, maybe let's try this.
Yeah, you have to.
Oh, just click
roll on
OK.
that. Okay,
And then, yeah, and then you can share your screen. Because you should have access to share your screen.
All right, so share screen, let's make sure I ready.
no problem. Okay. So you can share Excel, you can. You off the camera now? Hi, everyone. We're gonna be started introduce the HomeTrust BDM, the Tony, right? Probably we have been echoing for that because the Tony computer is the own. Okay, right. So welcome to Tony to that. It's the maybe the first presentation on the HomeTrust, right? That is the BDM Tony. So welcome, Tony.
Okay,
Okay.
thank you very much. Welcome, everybody. I'm glad you had a chance to join us. This was great. I like the opportunity to come out and try to do this whenever I can. I am an internal business development manager, so I don't do this very often. So I try to make the odd exception when I think that, it's worthwhile because of the size and the relationship that we have and that we hope to forge going forward. So feel free, guys. I want to make this as informal as possible. I want to try to give you some information, but stop me at any time if you have any questions or any comments that you'd like to add. Feel free to just let me know, and I'll stop and we'll take it from there. So, like I said, just relax. This is meant for you, and I am your business development person. So anything that you need, feel free to reach out and talk to me and call me or email me. And I'll do my best to get back to you as soon as possible, or do my best to respond and try to help you out. The idea is to grow your business and to grow it efficiently so that you're only sending in businesses that hopefully that will work and fit with our program and business that will get turned around, approved, and then funded. So it doesn't make sense to send something that's not going to go anywhere. And the only way to be assured of that is to have some idea as to how we work and what we do, and also to maybe touch base with myself, ask any questions that you may have before sending the deal in, That way, I'll be able to tell you if it looks like it should work. Nothing is 100%, of course, but I'll definitely give you the best advice possible, so we can try to go forward. Okay, so just wanted to let you know that, this is the HomeTrust Mortgage Solution. We no longer have an A side. We just have a B side and an equity line visa. So we just have two programs. We like to think that's what we do best. So we want to focus on that and just put all our efforts into doing those two products. They're very, very popular. They've been around for decades. Okay, so this is what we do. And I'll go into that in some more detail for you. And again, stop me if you have any questions. Okay. So
Tony, if you want to just make a widescreen for the slideshow, if you could just go to like present, click slideshow up there. Top left corner. Slide. Yeah, just-
perfect. Okay, guys, so we'll start off with the classic mortgages, which is what basically, for lack of a better term, is the B side. So that's what we focus all our energies on. So I want to give you some ideas to what it's all about, the B side. And it's good for both purchases and refinances, and for both owner occupied and rental properties, okay? And it's qualified like everybody else through the greater of the contract rate plus 2%. And we have, it says 1 and 5, but it's 1, 2, and 3 years. There are the terms. And the current 1-year term, if you want to write it down, is 6.64. For 2 years is 6.49. And for 3 years is 6.29. Okay, and I believe, and we do have an open as well, an open term. So there's no amortization on that. There is no minimum FICO score, so really any deal is possible as long as it makes sense. We try to work as much of a common sense approach as possible. So if there's a low score or no score, but yet we have enough reason to be comfortable with the deal, we might still be able to go ahead with the deal. So don't hesitate to run it by me or try to send it in. Don't let the score worry you too much, as long as we're comfortable that the client has a marketable property and has a willingness to repay and ability to repay, then chances are we could do that deal. Okay, so we'll go up to 80% loan to value and a 30-year maximum amortization. GDS, TDS, also a very, very big deal. We'll go 60 and 60 on those. Okay, it's almost leading in the industry, so it's huge. So we can really be able to put a lot more deals through than you normally would be able to otherwise at other places. So really take advantage of that large expanse when it comes to GDS, TDS. Okay. The lender fee is 1% for the mortgages and 2% for the equity line fees. And we'll go to just about any marketable urban areas and even suburban areas. As we go further out to where it's a bit more suburban, there's a chance we might reduce the loan to value, but there's a good chance we can do that deal. If it's really too far out, then we may not be able to do that deal. But if you're not sure, just give me a call or an email and I'll let you know. Okay. And when you do ask that question, try to give me an actual address if possible, the full address, postal code, and I'll try to get back to you to let you know whether that's someplace we'll go. I mean, we'll go to London, Windsor, Innisfil.
Can you get a loan up to 80% of the value in it though?
Potentially, yeah. All right, again, if it's well and septic, chances are we've cut it back to 65%.
Yeah.
And it's also case by case. So if we know the address, if the property is marketable and it's in a good area, we can look at it. We might be able to say yes to 80% here, or maybe 75 or something, but over here across town, we might do 60, but it all depends on what the situation is and the circumstance and what it looks like. Okay. And again, for rate hold, we'll do 90 days on a purchase and 60 days on a refinance. If you have a purchase and you have occupancy dates, for example, just remember we need an actual closing date, a final closing date. The occupancy date doesn't mean too much because it does shift all the time. So try to make sure you have that.
And I don't mean to interrupt you, and this may be a dumb question, but do you guys do pre-construction deals as well? Like, is there any?
We do pre-construction deals, but as long as we have a firm closing date, that's what I was getting at with this.
So if you have a firm closing date, then you're
We're
able to.
fine as long as it's within the 90-day period for the purchase.
Got it, within the 90-day period.
Correct. So if you know it, if it's a pre-construction and it's closing in September, so let's say
Or
it's
August.
not within that date, then you just wait and submit once it's within that 90 days. Then,
Gotcha.
then we're,
Oh. Thank you.
all right, so.
Use the arrow.
I was using.
Oh, so click on that, what, one button? Okay. You use. I did. We select on the Zoom. Okay.
So the two main areas that we focus on, we tend to focus on are clients that are self-employed and clients that may have had some bruised credit. So I'll start with the self-employed, and it really revolves around the story. Don't be shy when you're dealing with these clients and you're sitting in front of them. Try to get as much of the story as possible. Ask as many questions as possible. Put yourself in the mind of the underwriter and try to get as much detail as you can. Try to anticipate the questions that they may have. We want to know as much about the client. We want to know about the business. We want to know how it operates. We want to know how they make their money, how they get paid, all that. So try to ask these questions. So when you send it in, you have a full narrative. You have the whole note section filled out as to what type of business is it and how it runs. So ask questions like how long they own the business, what type of business is it? Is it seasonal? Is it a storefront? Do they operate from their home? Do they have a retail outlet? All these questions, try to ask as many as possible.
I like to barely hear you.
Sorry about that.
That's all.
My phone doesn't tend to stop ringing, so that's just the norm. Anyway. So if there are multiple owners, let us know, and maybe what the percentage is as far as the ownership breakdown is concerned. Is it a sole proprietorship, a partnership? Is it incorporated? If they've been less than 2 years self-employed, we'd like to see 2 years, but if it's less than 2 years, then find out what they did before that. So what is, if they've been in the same field or related industry, chances are we can still do that. We do accept property in BC, yes. Just let us know if you want a specific address, you let me know and we'll tell you, I'll be able to tell you what loan to value we can go. Victoria.
Yeah,
Victoria,
yeah, same.
yeah, that's a capital, we're good there, generally speaking to 80% loan to value. But if you have something that you're not sure, just let me know and we'll check you out, get back to you as far as the loan to value is. If there is a cash component in the business, that's fine too, but ask the question and let us know. The idea being, it's got to be reasonable, so especially for the actual type of work that it is. So let's say this person is a renovator or a contractor and they do some work on the side. Maybe they're in their own business, they're self-employed, maybe they make 150,000 gross. And of that 150, let's say maybe 25, 30,000 of that is cash. That's pretty reasonable and pretty normal. And if that's the case, you let us know. We can still use that full 150 amount when we go to do the calculations, because we find that to be a reasonable percentage breakdown for that type of job. Right? So if that's the case, just say, listen, when you go through the bank statements, you're going to see that maybe there's $120,000, $130,000 going through the account, but they actually have another 25 or 30 that they did make, but that was all cash, which they may or may not have deposited. If that's the case, we can still account for the full 150, and that's okay. So that's because it's a reasonable amount. If we were to flip it around and said, you know what, he's a contractor, he does renovations, but 120,000 of that is cash. That might be a tougher one to sell. So we got to keep it reasonable. And if it is, then we should be okay. So keep in mind though, when you're dealing with self-employed, we're gonna use the net income to qualify the deal. For pretty much everybody else, it's gonna be the gross income. But for self-employed, we're gonna use a net figure, which is the gross minus the cost of goods sold, minus the expenses. Whatever is left over is gonna be your net. That's the figure we're gonna use to qualify the deal. So that's very important. And for example, if they happen to be a partnership, let's say, 50-50 partnership, and they're claiming $100,000 in net income. And when we go through the account, we notice there's $100,000 net income. But if they're a partnership and it's 50-50, that 100,000 just became 50,000. So you have to be really conscious of that. So you make sure that the breakdown is proper, because when you send it in, you can't unsend it. So you have to make sure that you've got that sorted out before. Okay, so have a discussion with the clients, because what we do provide you with a stated income declaration form or business for self form that they need to fill out. So you can help them with that to make sure they understand it, because once they've completed it, then we get it, and that's it. That's what we're going to use to go by, and we're going to verify that against bank statements. So keep in mind, for self-employed, there are 4 things that we look at. We're not worried, or we're not interested in their tax returns as a result, as an example. T1s, T2s, T4s, T4As, T5s, T anything. We don't necessarily want to see that. So we just want to know, what does the business do? And typically speaking, we can find that through the bank statements. So we need 12 months bank statements. And these are the 4 things that we require: 12 months bank statements. And we're going to need that self-employed or stated income declaration form filled out. It's just a 1-page form, and I'll show you what it looks like in a second. It's very straightforward, so it's meant to be very uncomplicated. The last that we also need to see some invoices or receipts or contracts, basically transactional records to show you doing business. And we just need 4 or 5 or 6 examples in the last 6 months to show you that we can go back and confer versus the bank statement to show that you actually had a transaction that took place, and we can see the transaction going through the bank account. Okay. And the very last thing that we need, if it's necessary or if it's required, we need a license, some sort of proof of ownership of the business. So articles, license, even an HST number, anything to show business is being done. There is a mandatory lender fee. It's 1% for the mortgages, 2% for the equity line leases. You're welcome. Okay, so if it turns out they don't need a license for that particular business, maybe it's something, maybe they have a babysitting service or something where they don't need it. And we want to make sure they still file in taxes. So if there's an HST number, send that in. That's good. Cool. All right. If there are foreign connections, let us know. Because that takes some more due diligence when we go to review it. If it's from the United States, not so much. We're probably good with that. When it comes from other countries, we have to take a deep look at that for AML purposes. So we'll take a look and see. If there are ATMs on the premises, maybe they have a laundromat or a variety store or something like that. If that's the case, then let us know. If they are the ones that are filling and unfilling the ATMs, whole different level of due diligence required for those, and we have to take a good look at that. If the third party comes in and fills that, then it's usually not an issue. The stated income form, as I mentioned, it's very straightforward. At the top is just the name, the address, number of employees, and the nature of the business, and whether it's an ownership, sole proprietorship, corporation, or a partnership. Then you want to know the business owner structure. What the breakdown is, so it's 50-50, 25%, whatever it is. As long as it's more than 25%, then it's beneficial ownership, we're good. And the center of the form is that's where the numbers come in. So we'll start with a gross revenue at the top. So what is the total gross amount that they make? It could be $1 million that they gross. And after their expenses and their costs, they might be down to 100,000 as net income. It's perfectly fine as long as they understand the business and they show it, it's good to go. We're just interested in the business expenses, so we don't want to see anything personal in there. And we don't want 45 expenses, we just want the main highlighted ones. So give us 4 or 5 of the ones that's there. Give us a ballpark that's reasonable, and the net income is what we're gonna use to qualify the deal.
Can I ask you a quick question? In the event that, let's say there was a client that had a small business and then also had a salary kind of mix.
Yeah.
And let's say for the small business, let's say they're, I don't know, they do hairstyling or whatever, right? Services for clients, et cetera, and then they do something else. So, and then they collect deposits in the same account as they would for their personal, if they
Yeah.
mix it.
Yeah.
In that situation, how would you go about like
Well,
applying with something like that?
We do have a number of self-employed clients that only have a personal account, don't have a business bank account. And if that's the case, then we would go through it just like any other account. It would be nice if they could maybe even circle to see what the ones are, just to make it easier, but yeah, we go through the accounts just as well. Just let us know that that's the only account they have, or that's what they use, and then we turn, and if it's a combination, we just try to pick through to see what's what. And then the invoices will help, because we'll be able to tie it back to see what the transactions are.
And would you need more invoices in that scenario, or would you need the same 5 to 7?
The
roughly?
5 to 7 as long, which is gonna tie to the self-employed
Exactly.
part.
Yeah, you
The
know.
salary part, we don't have to worry.
No,
about.
yeah, yeah, yeah.
So, yeah,
Perfect.
same.
Okay, thank you.
No problem. All right, so, if there are any, outstanding tax arrears, then they can, there's a spot at the bottom, they can fill that in, just check the box, put the amount there. Hopefully, there's enough equity, there that we can actually pay that out through the proceeds. So we want to, because we can't have taxes owing, so we have to clear that up and get rid of that so that they can fill that in. There really isn't any way to verify that. It's up to them to tell us what it is, and then we can go through. If we find out after, it's better to find out before than to find out after, so it's important to try to get that in there as early as you can. Okay, so fairly straightforward, and we try to keep this form simple. It's a 1-page form, and it's included on all self-employed commitments. So it's already there for you. They just have to grab it, fill it out, sign it, and send it back with the commitment. Any questions on the self-employed portion?
I mean, do have a follow-up question if no one else has. So in that same scenario, okay, so the client, let's say, makes a salary,
Yeah.
not enough to qualify, right? So they also have business income or whatever, self-employed income,
Right.
that they would want to qualify together.
Right.
Right? In that scenario with you guys, right, you said the invoices and everything, but whatnot, let's say that income application, are there any other things you'd have to consider if we would want to, potentially submit something? Right?
Well,
Outside of those 4 main points that you need.
those 4 things are what we're gonna need for self-employed. For the salary portion, that's gonna be a job better based on
Yeah,
3
it's-
months back, 6.
Same stuff. Okay,
So nothing different.
perfect. Okay. And then it doesn't really matter because you guys, you're across the board, right? Geographically. So
Yeah.
if, for example, it's in a bit of a more rural area, we would want to run that by you just in case.
Yeah, that's really just for location. Geographically speaking, we wanna know, do we go there? And if we do go there, what loan to value are we capped at for that particular location?
Perfect.
As far as income goes, it's across the board. It's fine.
Perfect. Again, I know these are really basic.
No, no,
questions,
that's
but
perfectly fine.
We
The
have a
more
lot
the
of,
better.
we have a lot of new agents, so.
Absolutely. The more questions, the better. Like, don't take anything for granted that it's understood. I'd rather ask you to ask it. There's
Okay.
no stupid questions. Just put them out there and let's try to cover them, and we can.
Is there credit score matter?
No,
Yeah, we don't have a minimum score, so we look at the actual deal and see whether it looks like it makes sense to us. For the most part, our pricing is risk-based anyway, so if there's a low credit score, it would be reflected in the fee or the rate that we charge. But yeah, so if it's a low credit score, and I'm actually just about to touch on the credit now, so that the timing is good. If there's a low credit score, but there's a perfectly rational reason for it, then we can probably still do that deal. So again, you're gonna get into asking questions. So in as much as you ask as many questions as possible about the business, you're gonna do the same thing about the client, especially if there's been some credit issues in the past. What you're gonna find is that, for the most part, you're welcome. For the most part, people pay their bills, right? They pay their bills, especially their mortgage payments and the larger payments. But from time to time, life gets in the way and things happen, and we're aware of that. So no, we don't look at it from that standpoint. In this business, you can't get judgmental. You have to really look at the full story and see what happened, what took place, what caused it. Two things we really focus on is the cause and the cure when we go to underwrite a deal. So we find out what took place, when did it happen, why did it happen, and what have they done so far to mitigate it, to try to correct it, and has it been corrected, and are they back now on track to where everything is okay? Am I on mute?
No,
No, you're not.
because we have the,
Oh, okay.
So you're not.
Can you hear me now, Reza?
yeah, I hear you, because we have the another.
Oh, okay.
mic.
All right, so we, like I said, we want to ask the questions to see what happened, what was the cause, and has there been a cure in effect to to fix it? So ask the questions. Was there a life event that helped to explain the current credit profile? And what have they done to help to remediate the situation?
Reporting in progress.
If there are mortgages in arrears, are they current or were they in the past? Because one of the tougher things to get by is trying to do a mortgage, especially when you're trying to get more funds for a client who is currently behind on their mortgage payment. Okay, so try to find out what happened, why are they behind, and what's been the situation that led to them being behind, and what have they done now to try to fix that? Okay, so ask the question and try to get the answer. If there are judgments or collections, find out what caused it. Are they now paid? And what did they do in the meantime? Did they take out a new mortgage? Did they take out a private loan? Did they use a payday loan, or did they get more money from relatives or anything like that? If that's the case, let me know, and or let us know what happened, and we'll try to see if it makes sense as to where they are in today's in current standing as far as whether we want to continue or not. If there's been a consumer proposal or judgments or collections, we need to pay those off, and we are able to pay those off. It's not an issue. The only thing we can't pay off is a bankruptcy. So if the bankruptcy has been discharged and it's okay, then we can still do the deal. We'd like to see 2 years since it's been discharged, but if it's been less than 2 years and you can show us reasonable proof that they've now been back on track, they've got some new credit in place, then we can probably still look at that deal. Okay, as long as it's been discharged, they've got some reestablished credit, we're probably still okay. But tell us what happened, why it happened, when did it happen, and what did they do to remediate it? Okay. Let us know what trades are being paid if you're doing a refinance. Are there any tax arrears? And if they are, then we want to be able to pay those from the proceeds. Hopefully there's enough equity there to take care of that. That has to be taken care of before everything else. So if there are debts to be paid, maybe we have to put some of those debts on hold to make sure we take care of the tax first. And if they've got assets, especially liquid assets, listed on the application, because sometimes that can tip the deal in your favor because we got some sort of backup. The client has something in their favor. Okay. And it's generally speaking, you want assets that's really retrievable, that's liquid, such as cash or bonds or cash or stocks, GICs. If it's household goods, for example, it's probably not going to be able to do too much with that, but just as an example. And find out if the story makes sense, we want to know. So again, if let's say they fell behind on their credit cards and everything was fine up until a point, and then they lost their job or COVID came along, things went off the rails. What happened then? Maybe they had to take out some loans, maybe borrow from family. Maybe they had to get a payday loan or a private mortgage or anything like that. Tell us what, when, and why. And a lot of those things aren't on the bureau. So tell us those things, put it in the notes, put it in the liability section so we can account for everything. If there's enough room there to accommodate and pay from proceeds, we'll do that and we can make the deal work. Okay. Again, if there's been a bankruptcy, we can't pay off a bankruptcy, but we can pay off a proposal, collections, judgments, legal items, anything like that. So get the story, use the notes, and take full advantage of the notes. Write everything down that you can. If you see that on a credit, components of a credit score, the credit score obviously is going to be a large part of that is going to be the payment history. How do they make their payments? But as you'll find going forward, as you can see, utilization is almost the same amount as your credit, your payment history. So if you're maxed out, you're at the limit or over your limit, it's going to have a large impact on your credit score. So you can sort of give these little tips and pointers to your client. These are the things that make clients stay with you, you know, because you're not just doing a transaction, you're really helping them. You're giving them some reason and how to take care of their finances. And chances are they'll come back to you when they need you to do something else. So you want to keep them for a very long time. It's not just a transaction. It's more of a relationship that you're building. So these things help. So try to pass these information on and try to get, if they can get their credit, their balance to be less than half of their credit limit, it's going to have a large impact in reducing their credits, in increasing their credit score. And one of the top reasons for mortgage arrears is overextension. So if you're not managing your affairs very well, that's how things get sort of off the rails. So obviously a refinance is a good way to try to get things back on track, to try to consolidate some of their debts and try to put things back in order. So that can help. Any questions there so far on the Bruce credit? All right, great. Now, keep in mind, just because it says Bruce credit doesn't mean that we see nothing but bad credit deals by any means. I think our average Beacon score or FICO score is well over 700. So it doesn't mean it's just the nature of the beast. But what I'm trying to get to is that we'll be able to look at most deals on a case-by-case basis regardless. So don't be shy. If you have a deal, if the property is sound and the covenant is decent, then we could look at that deal. So we'll talk about it and I'll let you know real quick whether or not it's something we can do or not do. Now, the equity line visa, very, very popular product. It's hugely popular. There was a time when it was, geez, 15 days just to get to look at the deal, not to get a response, just to pick it up and look at it, just by sheer volume coming through the door.
Yeah.
Okay, so it's a good and bad. It's a blessing and a curse in one, I suppose, because there's just so much deals coming through. But there are reasons for it, right? As you are well aware that first mortgages are at a premium, and the people that have mortgages still outstanding and they've got really decent rates and maybe good significant term left on these mortgages, they don't want to touch. Nobody wants to touch that. You don't want to interfere with that if possible. So we are able to do these equity line visas above and beyond the current existing first mortgages that they have without interrupting or interfering with their first mortgage. That's why this product is so popular, because we can still do a second, this would put this in behind the first mortgage, so it's in second position. And we can do consolidations, we can do renovations, we can do pretty much anything you can do. It's basically a large limit credit card, okay? And it's a one-time upfront 2% fee, and there's no annual fee after that. So it's a beautiful product to have, and that's really what you want. You just want to be able to take advantage of the benefit of the flexibility and the convenience of this product. Okay.
This is the maximum amount. I believe it's 200,000.
No, you can go up to $1 million.
Oh, up to $1 million.
Maybe even more in some cases. There's flex sliding scale. So we obviously, for refinances, both owner occupied and rental properties, we can do that for it. And again, the qualification is better if the greater of the contract rate was 2%. No minimum credit score again, it's on case by case. The minimum amount on the equity line visa as a standalone is 70,000. Okay. And 25, there's a product called a one chart, which basically is a combination of the credit, the mortgage, classic mortgage, as well as an equity line visa, all in one. And the minimum amount we'd like to see on the one charge on the equity portion of that is 25,000. Again, we can go up to $1 million, and it can be in first or second position. Someone can have a house that's free and clear, would like to take out a mortgage, want the flexibility and the convenience of having the card rather than mortgage, then we can do it like that, and we could put it in first position, not a problem. If that's the case, we can go up to 80% loan to value in combination with the first mortgage. But if it's just the standalone portion, then we're at maxed at 65% of the property value. Got it?
Yep.
Okay. And again, because it's not a declining balance type of mortgage product, it's revolving, so there is no amortization. So it's fully open. You can pay it up or down as much as you want, use it for anything just about, okay? Completely flexible, and the GDS TDS again is 60% as well as on this product. So it's phenomenal.
Yeah, clearly.
Now, I should point out, if you do have a situation where you've got a TDS that's actually higher than 60%, doesn't mean the deal is dead. We do have options that we can consider. We have product what we call non-conforming. So if it's over 60% TDS, we can look at doing the deal on a non-conforming basis, which means the loan to value has to be 65% or less. If that's the case, and the TDS is higher than 60, we can still look at doing the deal, but we need a rationale for the affordability. So you need to tell us why or how are they going to be able to afford to make their payments if their TDS is over 60. And a lot of those cases, it's contributory income that's not readily noticed on the application. So let's say maybe they've got grown children living at home that's contributing to the household expenses, things like that works. Maybe they've got a spouse that's at home paying a good amount of the bills, but he's not on the title, that's contributory income. Maybe there's a basement apartment or another room in the house that someone's paying for. We can certainly do that as well. Look at that as contributory income. So we're not looking at the actual number. So, we don't say, we're going to cut it off at 70% or 75 or whatever. If it makes sense, we'll look at that deal. If you're telling me the TDS is 180%, then that's a little much. We're not going to be able to justify the affordability in that case. So we got to keep it reasonable, but that's how we look at those deals. So tell us that they can afford, and we can usually tell that they can afford it just based on their credit score or their credit history. So we know that they've got some money from somewhere paying it if it makes sense and it's legal, and we can look at that as well. Okay. So that's fine. And again, it's 2% lender fee on this product versus 1% on the mortgages, and the same property areas we can go to. So urban and suburban areas, we can't do this product in Quebec, but we could pretty much go wherever else we go to in the country. All right. And all deals are closed, whether it's a mortgage or an equity line visa through our FCT or FNF and the solicitor. Now, the minimum payment says $10. That's if it's pretty much paying down to nothing. That's all the only thing we look at. Now, I should point out that when we qualify the deal from the underwriting standpoint at HomeTrust, we look at a percentage based on the rate. So the lowest rate for this product is 9.99, and then there's 10.99. You can get the line afterwards, that's fine, but if you have any idea that they're thinking of doing it, it makes sense to do it all at once. Main reason for that is when you do them together and you do a one charge, you get charged 1% on the full amount rather than 2% on the equity line portion. So that gives you an advantage right there just on the fee. So if they're not sure about doing it and they're thinking about doing it later, it's a good idea to do it at that time. Because if you do it and they don't need it right away, they can just put the card away and just let it sit there. And you're only paying if there's a balance. So you're perfectly fine doing that now. But you're more than welcome after the mortgage to come back later on to get an equity line. If there's room in equity, you can certainly come back and do that as well. Okay. So you're welcome. As I was saying, if there is if you're looking to how we qualify the deal, the 9.99 is the lowest rate. And that's if it's 60% loan to value or less and a beacon of 78680 or more. The next level up is 10.99 and then 11.99, 12.99 and so on. So when we qualify the deal at 9.99, we use 1% of the loan amount. That's what we use when we, for our liability, for our purpose, when we qualify the deal. If it's 10.99, we go to 1.25%. And if it's 11.99 and up, then we do 1.5%. So just as an example, $100,000 equity line at 9.99, we would use $1,000. That's the 1%. If it's 10.99, we'd use 1.25, so 12.50. And at 11.99 and up, we would use 1,500. That's 1.5% of the balance. That doesn't mean that's what the client's paying. That's just what we use to qualify the deal. What the client's actually paying is just a simple interest calculation. So it'll be 100,000 times 9.99 divided by 12 and $10 at $10 today. That's it.
Okay.
All right. And again, your compensation is 1% split on this is what it's 50-50 on the equity line. On the mortgage itself, as for the 1 year term, it's 50-50. For 2 year, it's 55-45 in your favor. And for 3 year, it's 60-40 also in your favor. Okay. And as you climb the spire level, then you'll be able to see there's some volume bonuses apply as well. Equity line visa, as I said, it's for a lot of people that are self-employed. Self-employed individuals, people looking to do some home improvement projects. If you have a life event like a wedding or tuition, new baby, whatever it might be, those are ideal for the equity line visa. And again, it's like a high interest, a high balance or high limit credit card with a low rate. That's better than anything pretty much that you've got out there. So it's a good idea to maybe pay off all your other credit cards and put those away and just use this for all your revolving charge needs. It's fully convenient, fully open, and low interest rates. There's no annual fee, and a nice little bonus is there's no foreign exchange fees. So if you do travel, you can take it with you and then you can take care of all that without any extra fees. It's really handy. And when you do this, it just gets sent to you in the mail like any other card. It takes about 5 to 10 days and it shows up and then you're good to go at that point. If for any reason when you close the deal and you're getting the equity line visa and you need some cash right away, we do have what's called convenience checks. Like, you can ask the lawyer to provide that right up front. So if you want to do something right away, you can do that, or you can just wait till the card shows. Okay. As I was saying, those are your rates based on your credit scores and your loan to values. And again, at 60%, it's 1% that we use, 1.25, 1.5 at 11.99. Talked about the one charge already. So again, if you ever have a situation where you can have room on the equity and you'd like to add an equity line visa along with the mortgage, it's good. You don't have to do a separate application or anything. Just put it in the notes that, can you please add a one charge? And you can state the amount, or you can just ask them to give you the maximum or whatever you want. You can do that. They can take care of that. And again, if you do that, it's one fee, 1% up for the full amount rather than 2% on the standalone portion. Now, if we pretty much cover off the entire spectrum as far as the complexity of all mortgages, whatever they may be. So if you have some deals that are a little bit more complex, we've got a pod specially set up to handle those type of deals. So if you have those, don't be shy. You can send those in and it'll go to those people that handles that. And so if you have foreign income and down payment, it'll end up going into that pot. If you got 4 or more rental units, it'll go to that pot. We can have up to 4 units that we do with HomeTrust, but you can have up to 10 units altogether, non-owner occupied, plus your owner occupied, so it's 11 altogether that we can look at. Okay, so that unit will handle those deals. Any deals where there's builders and land developers, it'll go there. Okay, perfect. All right, if there's a stated income that's over 400,000, it'll go to that unit. If the stated income, which is the net income portion, happens to be over 500,000, then we will need those 4 things I mentioned. Plus, we want to see 2 years financials, business financials, in addition to those 4 things. Again, those 4 things are 12 months bank statements, invoices or contracts or receipts or point of sale receipts. And the last thing is the stated income form, as well as proof of ownership articles, HST number, licenses, things like that. If the title happens to be in a holding corporation name, or we can do those deals with a personal guarantor, and it'll go to that fund. And if the mortgages are over 2.5 million, it'll also go to that fund. So that means you got some specialized people looking at these deals, no matter how complicated it may be, they know what they're doing, they can handle those things. Obviously, it'll take a little bit longer, so the turnaround time is going to be a little longer. Maybe it could be 4 or 5 days to go through those, depending on the complexity. Okay. And the equity line visa, I was mentioning, and at one point it was 2 weeks, it might have been longer than that, then it was 15 days, then it got to 10 days, and I'm happy to say we're down to like 4 days right now, which is a beautiful thing. So it's good that the deals are still coming through the door at large volumes, but we're able to turn it through a lot faster. So what you want to do is just set the expectation with the clients. Let them know that this is how long it's going to take. It's a great product. It's well worth waiting for, but this is how long it is. So they're not calling you every 5 minutes or every day saying, where's my approval? So if you let them know up front, it should be a lot easier to handle. Same thing with all the other products. Let them know what it is. It's better to overpromise or over-deliver and under-promise, right? So by all means, let them know that's what it is. So take advantage of that. Make sure they're fully aware of what the turnaround is, and make sure you get as much notes as possible, get a full understanding of their credit situation, their history, and a full understanding of the company and how they earn their money and how they get paid and so on. And once we have that, and write as many notes as you want, it's not a problem. The more the better. And anything that you're not sure about, just give us a call or give me a call and run the deal by me, and I'll be able to let you know what if it looks good or what it can do. As far as the deals go, the submissions, I mean, every deal needs an application, credit bureau, and notes. Emphasis on the notes. Okay. And for purchases, we need to see, on all purchases, we need an upfront purchase agreement and the MLS. And just put that in Loft when you submit the deal. I'll send you a reminder when the deal comes in to go in. So once you know where it is, you can just go in and upload it, and that will be fine. If we do have some rush closes, then, if we can get the deal in within 10 business days with complete package up front, we can still usually turn that deal around. So just be aware and try to be as diligent as possible by getting it all in. Other than that, I don't recommend sending a lot of deals of documentation up front. It's better to find out what is being required first before you send it. That way you're not over sending stuff or sending stuff that we don't want to see or need to see. So it's better to wait. And when you do get a requirement for documentation, only send what is asked for. Don't send any more, don't send any less. Just send what's asked for, keep it simple, and leave it at that. And things will be a lot more smooth and seamless when you do that. Okay. And that's it. So we want to make sure that the files are broker complete 5 days before closing on average. So try to be aware of that. And if you're having any issues at all with responses or not getting any type of proper response, then loop me in and let me know, and I'll try to find out and see what we can do for you. If you have anything that you need, let's say, you do need a rush, or you're doing something looked at, or you want something done, that's what I'm here for. So just let me know, and I'll do what I can to try to move things along for you. So pretty much it. So it's very straightforward. Again, just loop me in if you have any issues and check with me. And especially when it comes to geographic location of the property, if you're not sure. And but otherwise, we could not normally go anything in the GTA where the GO train goes, we'll set 80% all day long. Okay, cool. All right. Any other questions?
Oh, go back for the one and charge, that is the, they're showing the lender fee is 1%. They have the spray with the commission for that 50/50.
50/50 on the one charge, yes.
Right. What about-
50/50 on the equity line Visa, 50/50 on the one charge, and it's the spire level, or the depends on the term
Right.
for the mortgage itself.
What about you show me the home equity line of credit, that the Visa, that is credit report score 680 is 9.99.
Yes, if it's 60% loan to value or less.
Yeah, that's
That's the
correct.
lowest.
What
score.
about the husband is the over 680, but wife is the 650?
The wife is 650, it goes by the income of the higher,
Higher.
the higher income earner
Okay,
is the beacon that we're gonna use.
Okay.
Well, but-
all right. I want to clarify.
Yes,
Thank
yes,
you.
yes, yes. So if she has a really good beacon score and she's not earning as much, then you gotta tell her to go get a raise.
What about both the same business, like the partnership?
If the same beacon,
Yeah,
yeah, then we'll use the higher. then-
no, I mean, it's the same business, but husband is 680,
Yeah.
wife is 650.
Right.
But they doing the same business, like a partnership for the.
That's fine, because we're still gonna use the husband because he's the higher
Right,
beacon anyway, so
Okay.
it'll be okay.
all right. So,
You mind, if I had a quick question, you said 50/50. What did you mean by that? Because what were you
commission,
on the one charge, right? You were saying.
On the full,
On the-
on the equity line Visa, it's 50/50, and on the one charge, because you're doing it as one registration, it's
Right.
50/50.
Got it.
But on the mortgage portion, it's gonna be based on the term.
Okay.
So higher the term, the higher the split for you, in your favor. 3-year split, 3-year term
That's
is the
right.
biggest split.
Okay, makes sense. Thank you.
All right.
annual location. Okay, thank you for coming for the Tony. Yeah, maybe they contacted you about the email. If you, some people have that, maybe our agent have the new deal, or you don't know about the area, we can possibly to the under geographic location
Yeah.
for the own Canada, right? So you can maybe BC and Alberta too, right? Alberta.
Alberta, BC,
and
we don't do Saskatchewan, we do
what about
Manitoba,
Montreal?
we do Montreal, but not PLB.
Okay,
We do Montreal
right.
mortgage, yeah,
Okay, so if
and the
you,
East Coast as well.
that's right. So if you don't know which location, send it to me the postcode, then let me
Full
know.
address, postal code, and let me
Right.
know, and I'll let you know what we can do, what loan to value we can do there. And it's always with the assumption the covenants.
All right, that's all right. Okay, thanks, Tony.
Okay, you're
Okay.
welcome, guys. I appreciate your time, and feel free to send me any deals or questions that you may have. And just run it by me. I want to see that if everybody can focus on maybe try to get one deal funded each month.
Yeah,
It's
yeah.
Not a lot to ask, and we can just try to. run
That's
it
right,
through.
that's right.
And
It's
then we'll try to do that. I'll
Sure.
be in the rest of your team on Friday, so
Yes.
hopefully we can get some traction going here.
that's right.
And by all means, like I said, give me a call, let me know, and we'll work it out. Okay, appreciate your time, guys. Thank you very much.
Okay, thank you, everybody.
Have a
All
good
right,
day.
have a good day. Bye.
Yeah.
Thank you, Tony.